Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Welcome back to a special episode of Kiss My Assets. Today we have Jamison Manwaring, our co-founder, and the one who signs my checks. We have Amanda Schwicht, who is a marketing analyst and very good at her job, and me, Heather, investor relations. So if you have any questions... And
you're good at your job too.
I am. So if anyone has any questions or just wants to talk, I'm the one to call.
I pretty much call you all the time when I can. Yeah.
And we are going to talk today about our brand new baby, the NV REIT, and questions our investors have been asking, a way to get their answers in one convenient little place, because, people have been excited.
Yeah, and it's different than our typical structure that our investors have gotten used to with our individual projects. So we thought this would be a great opportunity to use the podcast, not be in a hurry, and dig into some of these, top 4 or 5 questions that we're getting from investors and share those with our podcast audience. Because there are some differences when you invest in an individual project versus investing in a portfolio REIT like this. So thought it was a great time for us to dig into some of these questions, as we're now offering this as a new investment product for our investors.
And it's because it's new. We want our investors to feel very confident and feel really educated and empowered that they've made a good investment. So I think this is good. And we had such good questions from our live stream we just had. So this is, I think, a good way to answer them all.
Yeah, dig
a
into
little
them.
deeper.
So I know Amanda has a whole list.
I do. Thank you. So Jamison, this one feels a little more like you. What is the purpose or benefit of a REIT?
Yeah, so that's a good place to start is, what is this REIT, and, where did this come from? And REIT is actually an acronym, REIT, for Real Estate Investment Trust. And REITs were created by Congress and supported by the IRS as a way for investment companies to not have double taxation. So a REIT, one of the unique things is as long as we distribute 90% plus of our earnings on an annual basis back to investors, then the REIT itself doesn't pay any tax. Only the investors pay those on your capital gains or distributions, which is great.
For everyone.
For everyone, yes. Because typically most corporations actually have what's called double taxation. So a typical C Corp like Apple, the entity has to pay tax first, and then it distributes dividends to investors, and now those investors pay taxes on those dividends separately. So a REIT is a really unique thing. It's very common in owning commercial properties to hold them in a REIT, especially if you plan to hold them long term, and if those properties are generating cash flow for the investors. So we spent quite a bit of time, about a year and a half, deciding what the structure of this next phase of our offerings to our investors would be, and this is where we landed is to offer a REIT. And then the other key thing about the NV REIT is that we're planning to hold our properties for quite a while, 10 plus years. And these properties are properties that have already gone through the renovation, stabilization, lease up, and cash flow cycle. So they're already generating cash flow for investors. And that's different than if you go invest in an asset that needs to be renovated, where there's going to be turnover in the tenants. Those projects don't generate cash flow for a period of time. Sometimes it's 6 months, sometimes it's a couple of years. So the assets that the REIT will hold will all be cash flowing
right away.
Whole stabilized assets.
Yes.
And those are the ones that we're going to acquire. Only multifamily assets. So we have done.
We're very picky.
We did.
With standards.
With this, we're defining that right now. We have done, retail project. before, but we're not going to do anything except multifamily in the REIT.
I love it. Heather, so how is this different than investing in an individual project?
So I know a lot about our individual projects.
Yes.
And so our individual projects, I think, are a great way to, first of all, get to know our company, get to know the cycle of a project. They know everything that goes into it, and they can test us out. And then here's this project that's working for them, and then we go and sell it. And here's a way to still participate in that project once it's sold. You're still going to be earning your cash flow. So typically our projects, right, we purchase them, we renovate. Once they're stabilized and cash flowing, then we sell them, we say goodbye. But with the REIT, we get to hold on to those and still generate cash flow.
That's actually part of why we created the REIT, is because a lot of our investors said, well, why are you selling these properties that you've done all this work and you've repositioned them and now they're in these great neighborhoods and now you sell them to someone else?
Yeah.
And that's why we created the REIT. That's part of the reason. Yeah.
I get attached to them. I get a little sad.
And it's we're not going to put every asset that we have into the REIT, but the ones that perform really well. So we kind of get a cherry pick a little bit and we say, which ones do we want to hold long term? So these are the assets that we expect to see increased appreciation in the value broader than the general market because of the neighborhood they're in, because of the things that we're seeing in the city that they're in, because of the location. Real estate is local. So to understand what it's going to do and to invest wisely, you need to have a local understanding that's deeply local. And that's how we make these decisions. Which of these assets do we think will continue to go up? And the ones that we like will hold in the REIT.
Well, are we allowed to talk about the REIT's first acquisition?
Yeah, absolutely. Yeah. So we've just announced this.
Just between you and I and whoever's listening.
I'm just eavesdropping.
It's no, that's public.
Yeah.
We've announced our first acquisition will be our Williams project, Venture on Williams, and that is an asset that we've really liked. Yep. We did renovate it. It has these really cool architectural arches in the front. A lot of people, when they saw it, they said, "Oh, that's a really neat building. It's unique." And we felt the same way. But from a ownership standpoint, we really like the units, what we call the unit mix. There's 2-bedroom,
and they're large.
2-bath, and 3-bed, 2-bath, and they lease up very quick.
Well, we have an investor who is very smart, who on a call recently, she's like, I can guess. And she knew, and I didn't give it away, but she said, I know what your first purchase is going to be. She
assumed which one it would be.
Yeah, and she's like, because that's the one I would buy.
Yeah.
She said, that's the one I would keep.
We actually had some other investors right after we launched the offering that said, once you sell this, we'd love to buy it.
They knew she was the beauty queen. That was the winner. Yeah.
And it's certainly not the only one, but I think
they're all special.
It makes a lot of sense to hold this one long term. You also look at the maintenance. Some buildings that are built in the 50s and 60s, they have old plumbing and old roofs. Some of these things end up costing a lot of money from a maintenance standpoint. And this building is like an 80s building, so it's a little bit newer. Block construction.
As somebody from the 80s, I appreciate that. That's right. Put together a little better.
Right. Yeah. Big difference.
Yeah.
And then I think it's also important to talk about, we do plan as a company to also do some ground up projects.
Yeah. I'm excited about this.
Yeah, we have been planning to do this for a long time. You don't want to jump in too quick, but now is the time. What's happening with the market with interest rates, we expect to see some good opportunities to go buy some raw land, build from the ground up. And the REIT will invest in some of those projects and get paid a set rate of return, 15% rate of return. So if you think about it, we have to explain and want to explain to investors what we're going to be doing with the funds. Primarily, it's going to be holding properties long term.
Yeah.
It will also, as capital comes in, we will invest passively in some of those other projects that are developing projects, and those that will generate a 15% return. So the returns are going to be strong across both of these type A properties and type B properties. And I think it provides a really nice mix balanced portfolio
Yeah.
of these stabilized properties that are kind of generating cash flow, and then some of these opportunities that are newer and are going to provide stronger returns.
And that's helped me to understand the REIT, because I would say before we started to create the REIT here, it's not a word I'd ever heard. It was a little
Right.
intimidating. I thought, no, but our projects are so easy. They make iron. I've learned it. Let's keep that. But no, the more I've learned about, I've converted, and I see how these are. I like to think in a little marriage, they have fallen in love. Our individual projects and our REIT are joined together. I have to make it romantic for me. And even within the REIT, there's kind of two pieces to it that contribute to the return or the value that our investors are getting. That there's these two very important pieces working together.
Right.
Where these buildings that are this cash flow right away, that's where you're getting your monthly distribution. Our investors are seeing that. And then these other projects that are the ground up, the value add, where that 15% is going into the REIT. And that's so these are important things to put together, but they are separate.
Yep.
It's a great mix and creates a great return. So kind of digging into the individual projects again, why are we not just sticking with them? And I mean, some of the advantages of them is there's no fees, there's 12% return, and it is just a short-term commitment.
Yeah, so we plan to continue to do our current offerings the same way that we have. One of the challenges of our current business structure is that only Arizona residents can invest in those individual projects. And so we've had a lot of people who have wanted to invest in Arizona, and they might not live here, but they know what's happening here, and they like our strategy, they like our approach, and so this gives us the opportunity to let non-Arizona residents invest.
Yes,
and we will continue to do individual projects. So some investors do like saying, hey, I know that project, I like the plans, and I'm going to invest in that building. And there's something to that when you can drive by a building and say, I've invested in that, and that's great. There are other investors who aren't as tied to one building, but they might want to know, hey, I'm going to invest in 10 buildings over a period of time and own a piece of each of those 10. And that's really how the REIT will be structured, is that you'll own a piece of a broader portfolio of buildings.
And I love that we give our investors some options. There's something that's going to fit. It's a way to diversify, right, your investments, but also you can look at what fits me best, what fits my family. And as a lot of them are growing up and your life is changing and going through, one thing may make more sense than the other as time goes on.
Yeah, because one of the other challenges of the individual projects is a lot of times as investors, we have capital and we don't determine when that capital is available. So, an investment matures and we get $25,000 or we get a bonus or something at work and we want to put it to work right now. And when it's an individual project, you have to wait for that project to come up.
Yeah.
And then once it comes up, you can invest.
Yeah.
With the REIT, it's open 24/7 to invest in online. And the day that
Like
you
a
invest,
7-Eleven.
it's like always open. And when you invest, that day is when you begin accruing your returns. So that's
People want
the
their
big
money to be working for them all the time.
Yeah.
And that is probably on the when I talk to people, probably the question I get the most, even if it's the very end of another call, is, well, is there anything coming up? When's your next project? That is what they're most interested in. And it's nice to be able to be like, don't you worry. We talked about the REIT. I have something for you.
So to Heather's point, giving our investors more options is what we're after, and the core of what we do remains the same. We're finding properties that are in good locations that need to be repositioned, that we see a lot of value that can be unlocked there. That's what we continue to do. Now you can just invest in that same idea and in our overall team and philosophy in just a different way.
Fair. That makes a lot of sense. So a lot of people think that the REIT is more for young people because it has a long-term hold. Heather, you probably have like a lot of insight with your conversations with investors, but why would an older investor want to invest in something where the money is tied up for long term?
I think that's funny because I actually think REITs are more. I'm sure it's the older generations that invest in those. So that's kind of funny that that's come up. But I get it doesn't have an end date. So
Exactly.
Yeah.
So we have investors that are retiring and this is going to go forever. Why would I, I'll tell my son about it or I'll tell my daughter about it. And I don't know that I think this may be a question for you, but I've thought about, first of all, this is something where you're getting immediate distributions. So I think that's a great way for like some passive income to come in, the REIT, and it provides that 24/7, right? That it's providing it all year long and you're not having to wait for these projects. So that helps, I think, some of our older investors. But also here's something that you are building and leaving to you're building some generational wealth to the people behind you that you care about.
Right, because we will all pass away, obviously, so it's
for me
going
and
to
my
happen.
mom.
Heather is immortal.
That's right.
But when we have had investors pass away who own our individual projects, and they haven't matured yet, and so that's written into their will or to their living trust or however you have it structured. You, as an individual investor, you have to say who's getting your assets, including
and
the
we have a
ownership
beneficiary form that I can send you that if you want to have that on your investment.
But you as an investor will figure that out. But it doesn't matter if it's a 5-year investment or a 3-year investment. You have to figure that out with and you have to define that. With the REIT, it's actually easier because it won't expire. So it will, as when we sell the properties in the REIT, which we will, but it's long-term hold, we're going to take those proceeds and invest in additional projects. So it's going to be ongoing in perpetuity, just like owning Apple stock doesn't end. It's you own that stock and you hope it just continues to grow and grow. And then what you do with it down the road is up to you, whether you keep it long-term and you think it continues to grow or whether you end up selling. You can sell your shares or redeem your shares in the REIT as well. But it's not as easy as selling shares of Apple, for example, because real estate is not a liquid asset. So there's some transaction stuff that has to happen there. There's some costs there. So we try to help investors understand that this is a long-term play. If you're looking to day trade, get in and out, or if you want to know exactly the date when you're getting your money back, those individual projects are great. But this is a lot more like owning a portfolio of stocks, and you just let them work for you. And when we die, as we all will, the REIT is really easy to transfer to your heirs when that happens.
And I think it really speaks to what I love most about our company, the crowdfunding that we can do, is that it has opened up investing in real estate to a range of people that were before it wasn't accessible to. And so this idea of being able to build generational wealth for your family, or that this just is an extension of that. Here's another way for people who may have been shut out before to keep continuing to do this and to do it more.
And when you do pass it on to someone else, they have the opportunity to take that and add to it. And that's what you want to see your heirs do. Is if an heir gets $50,000 in inheritance, they don't go and blow it on something. So the nice thing about the REIT is it stays in the REIT, and as long as they let it stay there, it will continue to grow, and they can add to it and just see it grow beyond that. So I think in a lot of ways the REIT is more works really well for someone later in life.
So how do you determine the net asset value?
This is math, so this question belongs to Jamison. I'm here for personality.
So net asset value determines the price of the value of your ownership in the REIT, and you will have a net asset value share price. And so what happens is every quarter we will look at the value of all of the assets we own, subtract any of the liabilities, and show what is left over that is owned by the investors. And then that will be divided by the number of investors and the number of shares, and it'll show the share price. Very same thing happens when you own a public company. You look at the total market cap is what it's called, and you divide it by the number of shares that are outstanding, and that's how you determine a share price. So the net asset value, it really is a good description of what we do. Is we look at the value of all the assets we own, divide it by the number of shares that are outstanding, and that will show you the share price. The par share price for the NV REIT is $100. So when you come back and you start to look at the growth in your value of the shares, you'll use $100 is your kind of par value. And then, in period of time, you come back and the value is $125 per share. And so it's increased $25 or, 25%. And the other thing on top of net asset value is you also get dividends. So, or we call them distributions. So the net asset value is going to be what you'll look at to see how much your shares value has gone up. But you're also going to be getting 5% that we've announced cash distributions. And that's on top of the net asset value increase. So that's the nice thing about the REIT is we're paying a 5% cash distribution, and your net asset value will be going up as well.
Awesome. Love it.